All right, so good morning, everybody. This is going to be chart markups for day trading, right? And I'm just going to say day trading because, again, you can use these entry points for Forex, you can use these entry points for HFX, but we are just going to focus more so on HFX today. So if you guys do want to, please pay attention and take notes. But if you like to have your broker open as well, whether it's pocket option, vid forex, whatever you're using, just so that you can see what I'm looking at. I'd rather you have your broker open, or if you want to have your scanner open so that you can actually follow along. So of course, for somebody who this may be your first training or viewing a video for the first time, you always want to do your fundamental steps. And I'm always going to start here because this is always going to be somebody's first time learning. You always want to do your fundamental steps because when you're analyzing a trade, it's like it's just, I don't know, it's three parts. When you put on your shoes or you put on sneakers, you have to put on your sneaker, you have to tie the sneaker, right? Make sure it's secure. It's just steps. It seems like a basic thing. Okay, put your sneakers on, but it's just other steps within those steps to make sure it's secure and it's going to be a good look. Same thing with trading. It seems like, well, maybe I could just skip that step, but doing everything is just going to make it a better experience for you. So step one is always going to be to check the news, because you don't just want to pull up in the market and be like, hey, I want you. Like, you need to either choose what, like, know why you're choosing something or know why you're not choosing something. So when you're checking the news, there's only three things you're looking for. And the main thing is that you're going to see these folders telling you what the impact is for the news. And around the time that you're trading, which is 10:24 a.m. right now, you want to make sure you don't see any red folders, because that's basically telling you that the market is going to be moving very unpredictable. People are going to be buying and selling at a super fast rate. And just to give you guys a visual and why you want to trade on a yellow folder or no folder at all, is because this, right? And I've drawn this visual before. So this is the market. Let's say this top line is my selling, this bottom line is my buying. Now, when you see a yellow folder, it means that the news is pretty regular. So this is the market. It'll go down, it'll go up, it'll go down, it'll go up, it'll go down, it'll go up, it'll go down. And for the most part, it's pretty steady because that's the pattern. Okay, because that's the pattern that the market is making anyway. Now, when you see an orange folder, it's telling you, all right, we had some medium impact news that could affect how the market is going. So that pattern that we're used to seeing, those predictable entry points that we could find, it may throw us off a little bit and we have a higher chance of getting spiked out. So we'll see the market will keep its pattern, but if it's going to stay in and respect the zone is a different story. It may be a little spike out like that, but then it will revisit the zone. It will revisit the zone, but then there may be a spike out like that. So you'll have these instances where the market is moving steady, but it's a little bit unpredictable. So if you were going for, let's say, a sell, you could have cleared this one, and then you probably could have, I mean, a buy, you probably could have got spiked out here because it went further down than you expected. Now, red folders it's essentially no rhythm and no rhyme. This is when the market is moving extremely fast, and it can go from being within the pattern and then the very next trade being down here, being within the pattern, and then the very next trade being up here. And you don't really want that predictable market movement. I mean, unpredictable market movement. You kind of want something more steady so that you can actually find your entry points, right? So that's what the folders are telling you. How fast is the market movement? What is my likelihood of either like clearing this trade or getting spiked out, right? So if that makes sense along with the visual and why you want to focus on yellow folders, just drop a one in the chat, because this is always the first step and you don't want to skip this step, right? You have to check the news. You have to check the news. So step two, this is when you actually want to pull up your broker and you want to choose your currency pair based on what the payout is. Now, typically we just want to trade over 70%. The only reason I would trade under 70 is if I've already done my markups, I'm already in the market, and it's just like, all right, it's not that serious. So we have a few different options today, and this is just to make sure that you are getting your money's worth. If you risk $5, I mean, if you risk $10, you don't want to make $1. You want to make, I don't know, at least $6, $7. So that's what the payout is going to determine. So we're going to choose. Let me just go back. So we're going to choose, let's see, Euro GBP. I don't think I saw anything on the Euro. So let's choose Euro GBP, right? It's EG. So everybody can actually switch to that pair on your broker or on your scanner, because that's the pair we're going to be working with today, Euro GBP. And the payout's pretty nice. So check the news, choose your payout. Then you want to check the currency strength, because this is where you actually start to collect your confirmations. One when I first started trading, I would just say, okay, well, if this is this and this is that, then I'm buying or selling, but it's not official yet. It's only one confirmation. So you can write this down in your notebook, or if you can take mental notes, that's even better. But we're going to see who actually has more essentially pull in the market right now, the buyers or the sellers, starting from the beginning. So checking the news helps us pick which currency we're going to do. Checking the news helps us pick which currency we're going to do. And then the currency streams helps us choose a position, right? Because trading, this type of trading is all about position. What's your entry point? Where did you get in? And having the best position is what's going to make you money. So the currency pairs have two currencies. They have a base and they have a quote. The base is the first currency. The quote is the second currency. So if we're looking at Euro GBP, right? Euro is the base, GBP is the quote. Euro is the base, GBP is the quote, right? And I can just write this here so y'all can see, right? This is the base and this is the quote. And if the base currency is higher than the quote currency, that's just going to be one confirmation for a buy. It's telling you that the first currency is driving the market up, right? The buyers are buying a lot, and vice versa. If the quote currency, right, is stronger than the base currency, then that will be your first indication for a sell. We're looking at Euro GBP. I see that the Euro has more bars than GBP. I'm going to give the first confirmation for buyers. So right now, just as of now, where's that? I only have one confirmation for a buy, right? That's not good enough, but let's just see if I get into a buy to see what if the currency stream, what is telling me, is it true? Is the currency stream actually driving the market up right now? We're just going to get into this trade and we're going to wait it out because I want you to understand how these confirmations work, but you want to have more than one, right? Now, currency strength we see is going in our favor. This market actually is buying. And this is another good reason why you should use your demo as well, because you can see, okay, cool, I see what's happening. Now, as you move through the confirmations, you're increasing your chances of clearing the trade instead of losing. So you don't ever want to use one confirmation, but we did see as soon as we got into the trade, the market actually was going up. So it's like, okay, I can see that, but let's actually find our entry point and collect some more information about this trade. You never just want to do one thing, because I've seen that happen before. It's like, oh, well, I checked this and it's going up, so let me just get in just to not miss out on money. But you're actually losing money trying to rush the process, right? You're losing money trying to rush the process. So we only did 2 steps. We saw how it is a confirmation, but it wasn't strong enough to carry us into a clear. Now we got 2 seconds left. And again, that wasn't good enough. So let's actually get into our technical analysis, right? So far, we did our fundamental analysis. We just glancing over to see what's happening. Now, technical is when you get into the details. You get into the nitty-gritty details. So you log into whichever scanner you're going to be using, whether it's your Liberty scanner, your harmonic scanner, or wherever you're going to be reading your chart. And this is what you want to do. Let me take these off the screen real quick. So first things first, you choose your strategy. Once you log into the Liberty scanner, it automatically starts you on Web Slinger. But if you have a preference for a simple scalper, pickpocket, you can do that as well. But no matter what you do, you want to do the same steps on every strategy. So we'll start with we can start with simple scalper. We're going to start with the original simple scalper because it's pretty simple. And I know a lot of people get on Millie Mills live sessions, and this is one of the main strategies that she's using to look at the chart. So once you're here, you want to make sure you choose the right currency because it's not going to be automatic. So you can click anywhere on the screen, except if you have an iPad. I know there's been some issues, and you want to type in Euro GBP. And we're going to start, because we're doing HFX today, we're going to start our analysis on a 5-minute chart, meaning that every 5 minutes, we're going to get a new zone that's created, essentially new entry points for the buy and for the sell. So that means that this candle opened 2 minutes ago, right? This candle was 10 minutes before that. This candle was 15 minutes, 20 minutes, 25, 30, 35, and so on. Now, because we're doing HFX, we really just need to know like what's happening right now. Right now, we can check it on other time frames, but we still need to just focus on what has happened in the most recent time and not over a longer period of time as if we were doing Forex. So the first thing you want to do, and this is just what I do on every strategy, is the Liberty Scanner, IM Academy has already marked up the chart for you, right? Like the indications and everything you really need to read this trade is there. But what do you focus on and how do you find your entry point is the most work you're going to have to do. And we're just going to add 4 lines to our chart, right? And this can be, it is considered chart markups because you're adding stuff to your chart, but it doesn't have to be crazy and it doesn't have to be OD. Now, for people who have been on the trainings, this is just the simple house method. You only put 4 lines and you adjust those lines based on what the market is doing, but it really gives you everything you need in the trade. Lucky for us, we don't have to sit here and build a strategy from scratch because the strategy is already there. An indicator, it just tells you one thing about the price. This strategy has 6 indicators. We got the Bollinger Bands, we got the parabolic SAR, we got the 200 EMA, the volume bar, stochastic oscillator, RSI, right? We have all of those things. Now, a strategy is just 2 or more indicators put together. So the simple scalper strategy is giving us 6 indications that the market is either doing one thing or the other, which is why the more indicators, the better. But when you understand how indicators work, what the categories are, what's going on, you can just have a naked chart, which is why I really like Pickpocket, because I understand what I'm looking at, so I don't need too many things to confirm because I can see what's going on. Now, no matter what strategy you're using, you can use this technique called the house technique. So on the left panel, you're going to see your cursor tool, you're going to see your line tool, you're just going to see a bunch of stuff, but you want to click this one right here. And you want to click this little arrow. And the first thing you actually want to do is get a horizontal line, right? You want to click that because that's the first markup that you're going to be adding to your chart. I like to turn this line black just so it doesn't clash with any other colors on my screen. Then I also like to change the width so that I can see it. So I'm going to put this line, like literally think about this as you're building your house, you're building your foundation to actually get into this trade. So we're going to put a horizontal line to the left and to the right of the current candle. Why? Because this is the candle that we want to focus on. This is the candle that we want to start to collect our confirmations on. And I always say, if it's not in your house, if it's not between your 2 walls, you're not going to be minding anybody else's business. You just care about you and yours, right? So put the vertical lines on the side of the candle. That's just going to give you a focus, right? You don't need to look before that. You cannot look after that. You're strictly focusing on what's happening right now. And that's why we do this. Now, the only other 2 lines you're going to add are going to be horizontal lines. You're going to put one at the top of your candle, right? And you can make this line black as well. You're going to put one at the top of your candle, and you're going to put one at the bottom of your candle. This is major key because it doesn't matter if your line is all the way up here, right? Or it doesn't matter if your line is, sorry, I got to grab it. If your line is all the way down here. I'm trying to grab this line, y'all. If it's all the way down there, as long as your candle is within that box, you have already set yourself up for some really great entry points. Why? Because remember when I did the demonstration earlier and I showed you guys the market will always stay in the zone. Each candle literally is creating its own zone. So we can see that this candle, like it don't have to be all of this. This would just be multiple candles. But we can see that this candle itself, we can see that this candle itself has not broken out of this zone. So we know that this is the high for where price was at within that time frame. And we know that this is the low where price was at within that time frame. So essentially we know that if the market reaches 242, that will be a great place to sell. Why? Because in the last 5 minutes, in the new zone that was created, the market has not gotten higher than 242. And the same thing with the buy, right? We see that the market has not gotten lower than 227 within 5 minutes. We don't see any candle activity up here. We don't see any candle activity down here. Meaning that once price reached that line, it came back down and sold. Once price reached this line, it actually came up and bought. If that's making sense and you guys understand why we're creating this house and how this house essentially sets up our entry points, just drop a 7 in the chat. Okay, awesome. Thank y'all for participating. Now, somebody tell me, right? Is my entry point still valid? Are my entry points still valid? And if not, what should I change? Right? Because something just happened. Something just happened and something needs to happen. But what should I do, y'all? Somebody tell me what happened. What's going on in this analysis? Pull the roof up. No, it's not valid. It came out the box. Yes. Move your house. Exactly. Because no matter what, y'all, no matter what, whether it's a buy or a sell, you always want to make sure your candle is in the house. So for everybody who said move the top line up, you are completely right about that. So I'm just going to literally raise the roof so that my candle is valid. Because remember, The candle is the contents of your house. You want your stuff in your house. You don't want stuff outside the house. Like, you just want everything in your house within your view. So that's exactly right. You would just raise your entry point. Now, that's literally like how you find entry points, guys. These lines are your entries, right? These lines are your entries. You just have to, again, continue to do your analysis, continue to choose your position so that you can know whether you're going to be buying or selling. So cool. We set up our entry points and they're going to adjust as the candles adjust. Now we just have to count the confirmations. So the first question, if you're using this strategy, right, you will ask yourself, and let me write this down for y'all, right? You ask yourself, what color, so you can take a screenshot, what color is the current candle, right? So what color is the current candle is question number one. Question number two is price above or below average, right? And you're going to answer that based on the position of the dot. If candle is price and price is above the purple dot, is price below or above average? Somebody drop it in the chat, right? Because it's literally what you're looking at is what it is. I honestly don't know why we overcomplicate things, because if candle is price and the purple dot is the trend and the candle is above the trend, wouldn't that mean that price is above the trend? It just seems very, it's so self-explanatory when you take out all the fluff and stop overcomplicating. So the third question we ask yourself is, what color is the volume bar under the candle? And this should always be the same color as the candle, right? Because that's just going to tell you that, wow, not only, right, are the sellers in control, but the sellers actually have some power behind it. So think about the candle as who's in control, and think about the little volume bar as how much force they actually have behind what they're trying to do. Right now, we see this weak little bar. Do you currently think that the sellers have enough force to continue to drive the market down? Or will we need to wait a little bit? Somebody tell me, based on the candle, the volume bar, the entry point, what's going on, y'all? Right? We're going to wait. Exactly. We're going to wait. Right? And I'm pretty sure by the next candle, not only should we have a little bit more volume on the red candle, but the SAR, which is our purple dot, it should switch. Right? We need the SAR to be at the top of that candle to say that price is officially below trend and is going to continue to drop. All right, bet. So that's the volume bar. Now, your fourth and fifth questions are pretty much the same. You just want to literally look at these little lines down here. One of them is called the RSI, which is the relative strength index. How strong is the market movement? How strong is this trend? Is it going to continue to drop? And how fast is it going to happen? So if you see this line facing down, both of these lines is literally telling you that the market is going down. If you see this line facing up, it's telling you that the market is going up. It's momentum. Think about it like a roller coaster. Price was going up, as we can see reflected here. Price was going up, up, up. We see all these lovely blue candles, all these lovely blue volume bars, this lovely line, like a roller coaster. And then it turned around, it hit a peak, and then it dropped back down. So if y'all want to think about the stochastic RSI like a ride, you definitely can. So you can say, okay, cool. We going up, we going up. Oh, it's dropping. Oh, it's going up, it's going up. And then you'll see stuff like this where the line is kind of straight. It's not going up and down. And when you see that, you'll also see a small body candle. Think about this as the ride pulling back into the port, right? You know, the ride can either go up, 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 up. It can either go down, 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 or it can just reset itself, right, to start a new ride. If you're thinking about a roller coaster, if that makes sense, y'all just drop some sevens. That makes sense? Mm-hmm. That makes sense, Sophia? Oh, okay, good. So yeah, the last questions would be, are my lines facing up or down, right? And then based on the answers to the questions, you'll know which trade idea you should take. Do you keep your stochastic on default? Do you change it? I keep everything default. I keep everything defaulted unless I'm using the harmonic scanner where I have to put everything in my scratch. Everything stays default. So these are the questions that you want to ask yourself before any trade. You guys can write this down or screenshot. And then once you get it, just drop a 1 in the chat, because we're going to go back to some examples in the past just to show you what a perfect setup would look like. And then because you know what it should look like, you can know what you're waiting for. For example, this will be a really good sell candle, except we got to lower our floor and wait for our purple dot to switch to the top. Once that happens, we'll have the perfect setup for a sell. So just drop some. I forgot what I said, but just drop that number once you guys have written this down or taken a screenshot. Yes, you do need to move the house every time a new candle forms, because remember, every candle is setting up its own zone. So you need to just stay with the zone so your entry points can be as accurate as possible. The only time you don't need to move your house is if the entry points are still valid from the last candle. Um, so if you guys are finished writing this down or taking your screenshot, just drop a 1 so we can get into some actual examples. With HFX, at least it's actually okay if it has a wick, because with HFX you want to catch those spikes since the trade is so short. If it was a forex trade, you would want it to have a flat top or bottom because you want to have the cleanest entry point and you don't want that trade to reverse. Because forex is based on how far the market goes from your entry point, you want to make sure that there's as least chance of reversing as possible. And the wick always tells you low key a reversal is possible. It's okay, cool, y'all got it. Y'all got it. So now I'm going to just go back to the past. I'm going to just choose a candle. And remember, we're only going to look at the candle that's between the lines. And I want you guys to tell me, right? Just tell me if it's a buy, if it's a good buy, if it's a good sell. And if it is a good buy or good sell, why so? And if not, what are you waiting for? So we're going to focus on this candle. And I want you to tell me what I should do. Do I move my roof? Do I move my house? Are my confirmations there? Am I good? Am I not good? We focusing on this red candle. Everybody drop your analysis in the chat. Whatever you see based on what you just learned. Let's see. Okay, we're going to move the house. That's the first. Sell, shift the house down. Okay. All right, so y'all said shift the house down. Is this good? Okay, they said move it down. All right, so that's good. Okay, good. Yep, under the candle. Now, do we have all the confirmations for a sell? Oh, y'all say I can move the roof down too. Okay, so let's do it. So now, what confirmations do we have for that sell? Is this a good setup? All right, Jessica says yes. Vanessa said red candle. Ruby says yes. So this actually would be, oh, hey, Spicy. I didn't even know you was here. This actually would be a really, really, really good sell setup because we have everything we need. We got the red candle, red volume bar, RSI stochastic going down. Yes, everything, the stars on top. So if y'all saw something like this, you should be like, bet, that's perfect. And then you would know that your sell would be literally your top line is where you would sell that number or higher. So let's actually get a look at what's happening on the current candle so we can get a potential entry point and get into this sell on your demo. But y'all don't listen to me, right? So we got our red candle. We got our SAR at the top telling us prices below trend. We got a red volume bar and our lines are facing down. That's such a good setup for a sell. And our entry point would be, we can even make it right there, right on top of that candle. Our entry point would be 234 or higher, simply because that's where my roof is at. Right? I can't go, if I'm jumping up and down, I cannot go outside of my roof of my house. It's like, it's physically impossible. Like once I get to the roof or the attic, I have to come back downstairs. There's nothing else for me to do. I'm at that point. So if we were to go off of this candle, the entry point would be 234 or higher. That's a really great sell setup. And again, if you don't want to wait 5 minutes, because remember, you find the best entry points, getting your confirmations, and then entering at the right time. If this is a 5-minute chart, the best time to enter would literally be every 5 minutes from the top of the hour. So the last time to get into the trade would have been 10:45. The next time to get into a trade will be 10:50 or 10:55 or 11 o'clock or 11:05 or 11:10 or 11:15. Like literally as soon as that time starts, that's when you can get into the trade, right? So that is called market execution, right? Now, typically we think about market execution when we're doing Forex, but if you truly want the best entry point, no matter HFX, Forex, DCX, you want to start as soon as the candle forms. And you know when the candle is going to form because you have a countdown. So let's just say you actually wait 2 minutes, right? At 10:50, you will be able to get in for a sell because you have the confirmations for a sell at 10:50. Or, right? And please listen, because I get a lot of the same questions all the time. Your entry point can be based on market execution, meaning you get in as soon as the new candle starts. The new candle starts at the top of the minute for whatever you're analyzing. If I'm doing 5 minutes, I could get in every 5 minutes. It doesn't matter where the market is at, what it's doing. I just want to make sure I get in at 1050 as long as I have the confirmations on the previous candle. That's a gem, right? The second time you could get in is if you're actually waiting for the market to revisit a past entry point, which is typically how our live sessions go. We'll say, okay, if the market gets to 333 or higher, you get in for a sell or whatever the case is. And we only know that because that was a previous entry point. So we can get in as soon as a new candle starts to have the best entry, or we can actually wait for it to revisit a previous entry point, which is why we even have markups, because it gives us something to look out for. If that, I feel like that is just such a dropping a bomb. Like if that makes sense, y'all, drop a 7 in the chat. And let me see these questions. Yeah, you can definitely use this strategy for 1 minute trades. You guys can get into these trades for however long you want, but be mindful is whatever time frame you're analyzing. So if I'm doing a 5 minute, I can analyze this on a 5 minute, but I can get in at the 1 minute. I can get it for 2 minutes. Because if we look on the 1 minute chart, we can look at this and say, okay, we got, this looks like a buy on the 1 minute, but a sell on the 5 minute. So if we were to get in for a quick buy in 10 seconds, it's looking like it might go up, right? Like in 8 seconds, like no entry point, just click the buy button on your demo, right? If you lose real money, and I don't know what to tell you, I said use your demo. But look, I'm going to get in, right? And let's see what's going on, because we can do that, right? A quick buy on the 5 minute, or as soon as the candle starts, or again, wait for it to but remember, it's 5 minutes on the sell, right? So if you would have gotten for the 5 minute sell, right, you probably would be in profit, but you wanted to go for a 1 minute buy because you were looking at the 1 minute chart. But now you can see, yeah, that thing did drop, but it's going to go back up. But the thing is, it really depends, because on the 5 minute, it says sell. On the 1 minute, it said buy. It's like, which analysis are you going to go with? It's based on whichever you feel more comfortable with. If you had more confirmations for the sell than you did for the buy in the 1 minute, then you're going to wait for the sell, right? If that makes sense. So it's really hard to give you guys an answer when you say, okay, what should my entry point be? How long should I be in the trade? Like, that's based on a number of factors, like what you're looking at. How often is your chart being scanned? Are you looking at the 5 minute and getting in on the 1? Are you looking at the 5 and getting in on the 5? Because if we would have just stayed on a 5 minute chart, and this is why I say choose one and stick with it, don't try to do too much. If we would have gotten in the 5 minute, that was a clear for a sell, and we would have been in deep profits. But somebody asked about 1 minute trades, and you could do 1 minute, but as you can see, that was a quick little buy. We missed the opportunity, and it would have been better to get in for a sell, because now we have the confirmations for the sell on the 5 minute and the confirmations for the sell in the 1 minute. So for sure, you would have wanted to take the 5 minute analysis over your 1 minute analysis, because the trend is showing up on multiple time frames. If that really makes sense, y'all, drop a MS in the chat. And we're going to try it again, right? Because now look at this. On the 1 minute, y'all, we have our red candle. We have our red volume bar. We see it's facing down. We see it's facing down. We got 3 seconds left. And as soon as this trade forms, we should be able to get in, right? And it should also shoot down and do the same thing that it just did, because we have the confirmations in the 5 minute and the 1 minute time frame that this is going to sell. So I got in at 218. Let me know if you guys got in. And let's see, because you could have got in as soon as the candle started, or you could have waited for the market to get to 216 or higher, right? 216 or higher, and got in. So let's just see. I got in at 218 for this sell. You're in at 220. Let's see anybody else. Who else got in and what your entry point is? 220 is a good one. Sheesh. Sheesh. All right, 222 is not bad. That's the spike. This market is moving crazy. It's okay, y'all, though. As long as y'all understand the concept of what's going on, you know you don't want every trade. But let's look at Euro GBP. We can see that the Euro actually did lose strength, right? So let's just take it from the top and do everything, right? Let's take it from the top and do everything. And Jamira, I really don't know how else to say it. Like, I can't answer that question because it's up to you. If you're doing a 5-minute analysis, you can get in every 5 minutes because that's how often a candle is going to form. Or you can do the 5-minute analysis and take a 1 minute trade if the 5 minute and 1 minute align. Like, that's, I just don't know like how else to say it. It's going to be up to you. Like, if I'm looking at this on the 5-minute chart, let's do it together, y'all. And let's count these confirmations from the top. Let's switch the currency pair too. All right, we're going to go AC. We're just going to take it from the top. AC. So we check the news. We don't see anything alarming. That's step one. We choose our currency pair. We don't see anything alarming. We check our currency strength. We start to get our confirmation. So we have AUD, CAD. Somebody tell me who gets the first point for the confirmations, the buyers or the sellers? If we're doing AC. Okay, so the sellers get the first confirmation. Thank you, Crystal. We come to our Liberty scanner. AUD, CAD. We're going to start on a 5-minute. If you're still confused about time frames, just start on a 5-minute. Just always start on a 5-minute and only take 5-minute trades. Just so it's not confusing. All right, so you're going to do the same thing. You want to build your house around your candle, and you want to start to collect your confirmation. Once you build the house, now you collect your confirmation. So you say, what? Oh, a new candle just formed. So let's move this over a little bit. So you say, okay, what color is the current candle? So we got that the current candle is red. So the sellers are going to get a point for that. Is the candle above or below the trend? The candle is above the trend. What color is the volume bar? The volume bar is red. Is this line facing up or down? Down. Is this line facing up or down? Down, right? So we have sells. We have more confirmations for a sell. Now, this is a 5-minute analysis, right? We have 4 minutes left until the next candle. So instead of waiting for the next candle to form, which will be entering at market entry, wherever the candle's at, that's what we're going to do. Oh, this changed. So let's see. 1, 2, 3, 4, 5. All right. So now it changed. Now it's more for the buy, but either way, we have our entry points, right? We have 648 or lower for a buy, and we have 713 or higher for a sell, right? You have both your entry points, but you now have more confirmations for your buy. So you can literally focus on either or, right? But you know that because whatever you have more confirmations for, that just lowers your risk. But if you wanted to sell at 713 or higher, you could sell because price hasn't gotten higher than that. If you wanted to buy at 648 or lower, you can do that because price hasn't gotten lower than that. But because you see more for the buy, you would just focus on that to increase your chances of clearing. So we can, like, again, you could test it out. The candle was in that box, meaning the entry point is valid. If it gets to 716, that'll be a buy. If it gets to 650, that'll be, 716 will be a sell, 650 will be a buy. And then again, for people who are curious about the 1 minute, you can do it doesn't matter. You can do the same thing on a 1 minute time frame. It's just 1 minute instead of 5 minutes. So you have your entry point for the sells. It's the same thing. It's just a different time frame. You have your entry point for the sell. You have, sorry, y'all. I'm trying to move some stuff out the way. But the reason why is I'm not going to encourage you to do on 1 minute because if you're not comfortable doing your analysis and collecting your confirmations, it's only going to give you anxiety. The 5 minutes gives you more time to collect those confirmations and to be sure instead of being like, oh my God, is the dot above or below? Like once you get more comfortable, it's super quick to be like, all right, red candle above the trend, red up. So it's like, all right, it clearly looks like half and half. You don't know what you should focus on. But in 1 minute, it's changing so fast. You don't want to put yourself in that much pressure if you can just have a little bit more time to analyze the trade. You can even do 2 minutes, which I don't ever do 2 minutes. But if that's what you wanted to do, you can do that as well. And then you will still have more buy confirmations. So it's really all in what you're looking at. That's going to determine how long you want to be in the trade, how often you can get in, when's a new candle going to form. It's really all on you. Like I don't really analyze on the 1 minute. I analyze on the 5 and I take 1 minute trades every 1 minute. But you can analyze on the 5 and take 3-minute trades. You can analyze on the 5 and take 5-minute trades. It's what you feel most comfortable with. So when the 1 minute is looking like a buy, we can either get into a trade in 30 seconds with no entry point for a buy, or we can actually wait for the market to come back down to this previous entry point of 701. So you can just get in at market execution, or you can wait for it to get to where you want it to get to. So in this case, it said 755 or higher for a sell, or 705 or lower for a buy. So you will again just wait for it to either reach that entry point or reach the time in 3 seconds. If you want to do market execution, you would just go market execution for a buy, or you literally would wait for the market to reach that entry point. As you can see, it's pushing all the way back down. We got in that market execution, right? It's not in profit right now. So that tells us that, okay, cool, maybe I should actually wait for the 5-minute opportunity at 11 o'clock. Maybe by 11 o'clock, the market will go back down to my entry point. So let's see. Let's see. And the entry point that we'll be waiting for is 705 or lower, right? So we got in that market execution on a 1-minute time frame. As you can see, you can get spiked out on a 1 minute, which is why you don't have to do that if you can't do the analysis that fast and don't feel comfortable. So now we know that at 11 o'clock, it's either going to be at 11 o'clock or before that. We got, dang, I missed it, but we got 705 or lower, right? There we go. I got in at 705. So I really hope this it just, because it be making more sense to me even when I'm talking. So I really hope that y'all understand at least the difference between market execution entry and how that's risky. Like, all right, just let me get in, which is what a lot of people do, because I used to do the same thing. It's like, all right, I got it. Let me just get in now. I would get spiked out a lot versus let me wait for the market to re-enter this zone, which is a previously tested and retested zone, whether it's at the top of the hour or whenever it actually revisits that point. It make more sense to wait. It make more sense to do your analysis. It make more sense to mark up your charts. It make more sense for patience pays. Like, it makes more sense when you wait. So I hope it makes sense. So for anybody that was confused, like, did it make sense, the difference between a market execution entry and waiting for the market to retest the area that it already retested? Okay, because I really want you guys to be able to do this on your own. What time is it? All right, y'all, we have 10. All right, clear for the buy and the sell. All right, you're welcome. So guys, I'm going to do one more example. Oh, that's our phone ringing. I'm just going to do one more example. I'm going to take it from the top again. And I really just want you guys to just get in the habit of doing this process. Get in the habit of doing this process because it's super simple once you know what you're doing. You don't have to wait for a live session. You don't have to wait for me to get on. You don't have to wait for Millie Mills, DL Woods, Matthew Thayer, Money Marks, Alupe, like, what's his name? Kenvery. You don't got to wait for these people when you know what to do because they're doing the same thing. They may be using different websites, different brokers, but they're doing the same thing. I appreciate you too, Roy. You always show up. So we're going to check the news. We're going to choose a currency based on payout. I literally just go in order. I'm going to do Euro AUD. So we're going to go to EA. Right? We got our currency pair. Payout is decent. We're going to check the currency strength. EA. Right? I see that my base currency, which is my euro, is stronger than my quote currency, which is my AUD. That tells me, all right, bet I should be starting to look for a buy position potentially, but let's see what these other confirmations are. So we got euro, AUD. We're going to start on a 5-minute analysis. We're going to check the time. It's 11:02. Okay, we have 3 minutes before we can enter a trade, or we just got to find a really good setup and we can find our entry point. So we're going to go to M5. Shout out to you, Matt, clearing for the sale. We're going to add our vertical line, right? We're going to build our little house from the ground up. And this method is called the VVS method, y'all, because it's just vertical line, simple scalper strategy, right? So there we go. We did our setup. We have about 1 minute and 45 seconds, right? So let's count our confirmation. So y'all should be good. Y'all should be getting good at this. Somebody can glance at this and tell me, is this leaning for a buy or a sell? Is this leaning for a buy or a sell? At first glance, somebody tell me what y'all see, because y'all smart. Right? It's leaning for a buy. It's leaning for a buy. And just throw out some reasons as to why it's leaning for a buy. And if it's anything that's not for a buy, what is it? Because it's only one thing. Right? We got a blue candle, right? Yep, Andrea. Yep, it's in the house. Yep, everything except the SAR, the volume bar. Exactly, right? You guys can do this. You can definitely do this on your own. So we got in the 5 minutes. We got our buy entry point, right? So we got our sell entry point as well. So we got our buy entry point, we got our sell entry point, but it's looking like it may take a while for the market to get back down to that. So we don't want to wait. So you know what we're gonna do? This is when we're gonna move our time frame to the 1 minute, and we're just gonna do it on the 1 minute because now the time frame is even smaller. And let's see. Now, at first glance, somebody tell me, is this a buy or a sell? Is this a buy or a sell in the 1 minute? At first glance, everything you need is right there, 2 second style, right? Exactly, y'all. Exactly. In the 1 minute, we got the sell. We got our entry point at 372 or higher, right? We got 372 or higher for a potential sell. Or this is the 1 minute. We could just wait until the market gets back up. We have 8 seconds, 7 seconds, 5, 4, 3, 2, 1, right? So, oh, look at that drop. Oh my goodness. I saw it. I wasn't in, but I saw it. Let me get in and try. So let's see if we take this market execution, right? You saw that thing, it shot down. So let's see if you do take market execution, what happens? And if you don't take market execution, which we see is way more riskier, we just need to wait for the market to get back to 372 or higher. Right now, let's look at our entry point to see if it was 372 or if it was just whatever we wanted it to be for market execution. See, look, my entry point was 331. That was not in my analysis, right? That was now look, now watch what happens when you actually wait. Somebody take 372 or higher and let me know what happens, right? Watch what happens when you actually wait for it to retest the area it already tested. All right, there you go. I'll take it as well. Right? As long as this thing clears under 372, you know that patience pays, right? You know that patience pays. So let me know if you guys got into that. Are you watching this, Sophia? Are you watching this? Like, all right, 369, awesome. 374, okay. Oh man, look at this. It's acting crazy. I see a lot of people got in. You can tell by how the market acting. I see y'all got in at 377. What was your entry point, Vanessa? 385. Oh, you got the good one. You got the good one. We got 30 seconds left. But look what happens. Because we can look at I bet you if we go and look at, it's going to drop. Don't worry. But look, y'all, is the candle inside of our house or outside of our house? Right? And this is the 1 minute chart. For people who want to be so frisky with 1 minute, it's too fast, right? It's too fast. But look, the candle is outside of our house, right? So we know that our entry point should have been higher, but we got in, right? But we got in because we want to do 1 minute trades. Now, guys, focus on 5 minutes. Focus on what works. Focus on what works for you. But we're going to wrap it up for today. I think everybody should have at least a little bit of a better understanding of how to actually analyze the chart, how to know